ARCs are the only way in which you want to have some sort of an exposure to the stressed asset space in India, because many foreign funds are interested in this space. CPPIB had a tie-up. KKR is looking very closely. So there are many. Are you also looking at more stressed assets areas for taking advantage of the downturn that we are seeing right now and probably reap benefits in future?
The answer is yes. And in fact, the platform with Tata Power and ICICI is looking at distressed power assets. And the way we've defined it is assets that are within 2 years of being commissioned. So acquiring these assets, helping them get to operating condition. So that is another area.
But nothing meaningful has happened on that platform.
No, that's right. It's a platform that we've established but is yet to acquire assets, but they're very actively looking at such assets.
Where do you see the problem lies so far? Because power assets had been struggling 1 year back as well, and if in the last 1 year you haven't invested, there has to be some critical reason for that. Is there any?
Well, the platform was only established in August, so it's only been 5 months, and they're actively looking, and things take time to negotiate and finalize. And the types of stressed assets that we're looking at are either the contractor, the operator is stressed. That's one possibility. Others, as you well know, have not been able to get various approvals, whether it's for the environment, for access to in this case, fuel. So with Tata Power's involvement and their long history and success in developing projects, we feel there's a good fit. We bring in a lot of the capital with other partners, and they bring the technical expertise to get these in operating mode.
All right. So that there could be more action in that particular area. But coming back to financial services, you said you're interested in that particular space. You just made investments in ARCs. What about banks, NBFCs, and various other verticals in this sector?
Yeah, I think exactly. There are lots of opportunities. We're very interested in investing in a bank, in other NBFCs. So yes, over the next 2-3 years, I expect we will make 1 or 2 more investments. As you well know, the state-owned banks are struggling a bit with capital and with, again, having distressed assets on their books. So we think there's a lot of potential for several of these private sector banks to continue to grow and to have a huge impact on the development of the country. So yes, we are looking at a number of banks here. And
what about insurance as well as housing finance companies?
You hit the nail on the head. We love the insurance sector. It's a very good fit for a pension fund, so it's deploying long-term assets. So insurance, we'd love to see the development of the pension fund industry here and NBFCs like Edelweiss. Now, we are not going to have lots of these investments. We're going to pick a few and really develop a long-term partnership with the scope of deploying through them and with them $200, $300, $500 million.
If you can throw more light on the valuation bit as well.
Well, valuation is a challenge. India is currently, I'd say, the darling of the investment world as far as emerging markets, and it is reflected in pricing. So that is a challenge for us. The fact that we're, again, taking a long-term view, I think, would help us. But yes, we're actively looking at a couple of more investments now. They may take 6 months, they may take 12 months, but it is something we're very much focusing on. So I'd say the market is fairly fully priced. So it's a bit challenging for us to find fantastic investment opportunities.
Are you not interested in telecom towers, Rashad? So many investors are looking at it, and there is a huge amount of supply of that asset.
Well, we are looking at it again, and again, it's an interesting subsector because it lends itself, again, to the types of long-term investments, perhaps not extraordinarily high returns, but good returns, but fairly even returns over time, not terribly volatile. So infrastructure-like, in other words. So yes, we're looking at that, have been for the last 2 years. We've not found the right opportunity, but it is an interesting sector for us.
All right, so you're still looking at it because every tower company is up for sale right now in the country.
Well, you see that there's a huge need for additional capital. It's very capital intensive. So that's where there's potentially good fit. Somebody who wants to deploy capital, somebody who needs it. Again, from our perspective, a good risk-return balance. So yes, we're looking at it, but we have to find the right partner, the right valuation, and this takes time.
All right, and in consumption space, you said you're looking at that as well. Which are the areas, because consumption is a large area, are there any specific areas that you're more interested in?
And we have not identified specific areas. You're right, it's quite broad, and we're just saying, like others, we're seeing the growing middle class, and so it's a growth opportunity. And so we're earlier stage in that sector. We've just identified it as an attractive sector, but we don't have anything specific.